Welcome to Turbulence, a special series on global finance and geoeconomics in an age of disruption from All Things Policy, Takshashila's daily policy podcast. I'm Anupam Manur. For 80 years, the direction of travel in global trade ran one way. Barriers fell, supply chains stretched across the planet, and openness was treated as plain common sense. That consensus is now in retreat. Tariffs are back, industrial policy is respectable again, and governments are starting to ask not what's cheapest to buy, but what's safe to depend on and whom they can trust. So, in this episode, we ask the question underneath all of it. Is the world trading system genuinely breaking apart? Or is this a noisy detour that economics will eventually pull back on course? And either way, where does it leave India? To make sense of it, I'm joined by Devashish Mitra, who has extensively written on the political economy of trade policy and spent time studying why countries protect their industries even when economists tell them not to. He's professor of economics and the Kramer Professor of Global Affairs at the Maxwell School at Syracuse University, where he recently chaired the economics department. His work runs both into deep theory to the most current question on what the new tariff wars are actually doing to us. Turbulence, Global Finance and Geoeconomics in an Age of Disruption is a special series of Takshashila's All Things Policy podcast. This series is made possible by the generous support of Zerodha. Welcome to this episode, Professor Devashish Mitra.
Thank you.
All right, before I start asking you questions, let me just set the scene. On the 2nd of April 2025, President Donald Trump stood in the Rose Garden, held up a chart, and announced what he called as Liberation Day, a wall of tariffs on almost every country America trades with, friend and foe alike, with the rate set by a formula tied to bilateral trade deficits. Well, even Heard Island and McDonald's Island, where mostly penguins reside, were not entirely spared from Trump's liberation calls. So to understand why that particular event sent ripples across the world, I think we have to go back and remember what it broke. After the disasters of the 1930s, when there was waves of retaliatory tariffs and beggar thy neighbor kind of policies that deepened the collapse that led ultimately to what became the Great Depression, the world then spent a better part of the century building the opposite. A rules-based trading order, which I think both you and to a lesser extent me have been arguing for, where tariffs were negotiated, they were bound, they were applied to everybody on the same terms at minimal levels. And if there were disputes, they went to an institution where it was solved. It was often imperfect, for sure, but it was still rules-based nonetheless. Liberation Day tariffs, however, was the clearest sign that we have stepped a long way from that kind of order. This was a direct shift away from that order, and especially from the country that kind of defended it until then, for the longest time. So that is where I want us to start, Devashish. These tariffs were called reciprocal tariffs. Basically match what other countries charge us. You've argued that the formula wasn't really even measuring what other countries' tariffs at all. And it was, in fact, it was a really broken formula. We don't know where that came from. I mean, we do know now, but there was not a lot of economic logic behind it. Do you want to take us through that particular part?
Yeah, thank you for the question, Anupam. Of course, if you look at the tariffs that were part of the whole vector of Liberation Day tariffs, you can see like countries like South Korea on whom, 25% tariff was imposed, or Taiwan. These are countries that have very low levels of tariffs, right? Taiwan probably has like 2 or 3% tariff, Korea a little more, and so on. India has a slightly higher tariff, but the Liberation Day tariff that was like 25 or 26% on India later got doubled because India was buying Russian oil, and all that was not really reciprocal as we understand. Their idea of reciprocal was that, we need to set a tariff that'll bring down our trade deficit to zero. The problem with that is that they put a tariff even on countries with whom the US has a trade surplus, right? Countries like Australia, or Brazil. So if you look at the logic, I mean, there is really no connection between tariffs and the trade deficit. It's a totally a macroeconomic thing in the sense that if it's an economic identity, which basically is that net exports is just the difference between saving and investment. So to think about it, right? What is our national income? It's the same as national output. So if I am actually in net terms saving, if the country is saving, that means, we are not buying all the things that the country is producing. So what must the country do in net terms? It should export, right?
Export.
Yeah. So if I'm actually not living within my means, if the country is not living within its means, is spending more than it's earning, then it means that it's buying more than what it's producing. So in net terms, it'll import. So that's the logic. And how do you control savings and investment? Through macroeconomic policies, fiscal and monetary policy. So, if you think about it, if you put a tariff, let's say you increase tariffs, if you increase tariffs, you're going to basically reduce import demand. If you reduce import demand, then the demand for foreign exchange goes down. So the exchange rate of foreign currency goes down. That means the exchange rate of your own currency goes up. Or, for the US, they can just use dollars. It means that if they reduce their imports, then that's going to lead to a reduction in the supply of dollars in the foreign exchange market because they can use dollars to buy their goods.
Yeah.
But if it reduces the supply of dollars, then that's going to increase the exchange rate of the dollar. That increase in the exchange rate will make the goods US produces more costly in local currency terms in other countries. Okay, their demand for US exports will go down. So, and the foreign goods will be cheaper as a result in the US. So import demand will go up. So overall, there'll be this offsetting indirect effect coming through exchange rate adjustments. And they actually, when they said the tariffs, they said, "Oh, let's ignore exchange rate adjustments." So
Yeah.
that is a big thing that they're ignoring, and it could just offset the whole. The exchange rate adjustment itself might offset the whole thing. The other thing, of course, is that uh, trade or current account deficit really means a capital or financial account surplus,
Yeah.
right? So American assets are financial assets are attractive, both in terms of safety and also probably returns. So people abroad want to buy more American assets. So that is the force that's leading to a capital account uh, surplus in the U.S., which means that capital is flowing in. So which means that the trade deficit should go up, right?
Yeah.
So that's another thing. And the other thing is that you can talk about a trade deficit or trade surplus overall, but bilateral trade surplus or bilateral trade deficit just doesn't make any sense, right? So I think it was Robert Solow who said that you know the fact that I have a trade deficit with my barber doesn't mean that I'm not living within my means because my barber is not buying any of my services. I teach in a university, he's not buying any of my services, but I'm buying his haircut every month. So that doesn't mean that I'm not living within my means. So that itself basically totally uh, demolishes the argument about having a bilateral trade surplus as opposed to a
Yeah.
bilateral trade deficit. And let me also say that if you look at the recent Cato Institute study, they
Hmm.
found that 1 year of high tariffs has made no difference to the goods trade deficit that the US has with the rest of the world. But also, why just, what they did was they focused on goods trade, right? Why just focus on goods trade? There's also services trade, and they have done everything possible to reduce exports of higher education. That's one of the biggest strengths of the US, right? They've done everything possible to discourage international students from coming into the US. Universities like ours, which had like 15% international students, now have about 3 or 4%. So that actually was something that was bringing that was adding to the trade surplus, or shrinking the deficit quite a bit. And that's going to make, if you look at goods and services overall, and in this world you cannot ignore services, it doesn't really show that they really care about trade deficit, or anything like that. So and of course there's a faulty formula issue with the reciprocal tariffs. Yeah.
No, that's actually what I wanted to ask you about,
Yeah.
which is for the longest time, the United States has had a trade deficit and it's not really worried about it that much. In fact, it was in a way to show off American consumerism. That was not a problem as long as it was always financed because they have also the international kind of seigniorage power. It was
Yeah.
more financed by the capital account surplus, and they've always had a capital account surplus. So that was not seen as a problem as such. So why has it now become a problem? And especially, as you said, a country-specific current account or trade goods surplus and deficit has become an issue. So is it really the current account deficit that they're bothered about, or is it a loss of competitiveness and manufacturing which is being reflected through this?
You know, Jan Timbergen and Ragnar Frisch got the Nobel Prize in 1969, and I think it was 1969. And one of the things that they said was that you need as many policy instruments as you have policy goals.
Yeah.
Now they have tariffs, and they say that they're going to, with the same instrument, they're going to reduce the deficit. They're going to create manufacturing jobs. They're going to raise revenues. Okay, so it's just not possible. So they keep on adding these different things, to what tariffs can achieve, and it just doesn't make sense in that regard. One of the things, of course, was this. People keep talking about the China shock, and there were a lot of jobs lost due to the fact. Manufacturing jobs lost due to the fact that the U.S. couldn't compete with China in many manufacturing industries, especially the more labor intensive industries like textiles and apparel and many others. And so, there's been a lot of work by Otto, Don, and Hansen showing the effects of the China shock on employment. There's also a lot of work that shows that people were not happy with this, and that has pushed voters towards the Republican Party, especially since Donald Trump became the leader of that party, right? Because he came with this whole, it was as if it was his whole idea that, tariffs was a big thing that could cure everything, right? So, and he kept on saying that, we should not accept this trade with China because it's killing jobs here. We're going to have these big tariffs. I mean, he threatened tariffs on other countries as well, but it was mainly China. So then they found different reasons why tariffs would help, and of course, Donald Trump never listened to the economists, so he thought it was, and he actually liked tariffs since if you go back to what he said in the past, even before he entered politics, right? He basically was a big lover of tariffs, right? So they came up with different reasons. They had decided they would go with very high tariffs and go into a trade war with China, and but it was also very it was kind of a populist policy that appealed to the people that China has taken jobs away from us, and we are going to kind of use like a weapon like the tariffs to attack them. So, and then they came up with all these, exports. They had to rationalize how tariffs would be good, and Trump, always talked about trade deficits as if it was a very bad thing. But economists have said that, when the economy is doing well, you spend a lot, and you spend a lot on domestic goods, and you spend a lot on foreign goods. If you spend a lot on foreign goods, it's going to increase trade deficits. But I also said that that U.S. Financial assets have seemed very attractive and lucrative to many investors. So if they're going to buy a lot of American assets, that's going to increase the capital account surplus, increase basically the financial account surplus. That's going to lead to a trade deficit as well. So there are many reasons why a good economy would have a trade deficit. So, and of course, they discount whatever economists say, and basically they discount whatever experts say. It's just not limited to economists, right? It also, about physicians, what they say about vaccination, and so on and so forth.
Yeah. So in terms of just I mean, you kind of mentioned that in the last 1 year, nothing has happened. I actually tried to look at some of the evidence. I think there's a very nice Politico report, and many others have looked at the evidence from the first term, because in this particular Trump's presidency, the president kind of doubled down, but this is not entirely new. He had a set of tariffs in the first round, and so here's a little bit of evidence for the listeners, right? So in the first trade war, which happened, from 2016 to 2020 or thereabouts, the trade deficit for the US actually went up from about 481 billion in 2016 to about 679 billion in 2020, adjusted for everything else. But more importantly, the average increases in the prices of targeted goods for tariffs was about 22%. Right. And so clearly the pass through in certain sectors was just 1:1. So, for example, I think in automobiles, the American consumer shouldered 100% pass through. In some other parts, it was 20% pass through, 40% pass through. But ultimately, this showed that the American consumer was, in fact, paying a lot more for the goods because of the tariffs. And finally, as you said, I think the clearly violating the Tinbergen principle, the tariffs were given as a justification for multiple things, not just trade deficit, but also for jobs and so on. But even there, you could see that there was a net negative effect. So again, there's evidence that the net loss to the economy was nearly 25 billion in the year after the tariffs came into effect in 2018. So just in 2018, after that, the net loss was about 25 billion. And then there was, you can't isolate these things. There was the retaliatory tariffs by EU and China because of these first round of tariffs. And because of that, you could see that, the Trump administration, in fact, had to pay out $23 billion in aid to farmers for trade related losses. So I'm just trying to put these things in perspective, where one of the reasons again given is that the government earns revenue, that tariffs are seen as a way to earn revenue. So yes, of course, the US administration would have earned some revenue, but they had to give out a bigger kind of aid package to people who lost out due to retaliatory tariffs. And finally, I think the estimation is that about 300,000 jobs were lost thanks to the first trade war. So this is just putting things in perspective, that the net loss to the US economy seems quite dire. And this was before, this was enough in the past where we could see the effects of it. So how did that come to be again? Where, wasn't there enough pushback against the tariffs based on the learnings from the first round? So it's clear that the US consumer is paying for that, US consumer and others, producers as well.
Yeah, the U.S. consumer is paying, and then when they actually calculated the reciprocal tariff, they actually put in very little in terms of pass through in the formula, much less than what was estimated by economists. And Trump, despite the evidence, he disregarded all that evidence. He basically said that if tariffs were so bad, why did Biden not reverse the China tariffs? And there he has a point. And I think it was also a mistake on the part of Biden, because inflation was a problem, and getting rid of the tariffs in China could have been way to keep bring prices down a little bit, right? So and he did not do that, right? So and he basically, there was also this thing about experts don't know anything, and this is hurting China in many ways. And what China also did the first time around, in the first trade war, was that they had retaliatory tariffs on products that were being produced on you know all the Trump supporting areas, right? Especially on things like pork, soybeans, and stuff like that.
Yeah.
So that actually hurt a lot of farmers, and they had to, provide some financial aid to farmers. And despite this, all this Trump knew, but he actually, the thing that he did was also that if his main target was China, he didn't just focus on China. He actually put a lot of tariffs, high tariffs on US allies. And, and that's not the way to kind of, if you have like a geopolitical foe, right? And you are trying to weaponize tariffs against your geopolitical foe, then, your friends, you're also converting into enemies and pushing them to to the side of your foe, right? And that doesn't make sense, even if you don't know any economics, right? So it's very hard to kind of make sense of what happened. And they've continued with this. And they basically also thought that they would use this as leverage to get massive tariff reductions, massive deals, investment promises from other countries. Of course, they've got some investment promises, but they would have probably, those countries would have invested anyways. And in many cases, the time horizon is not clear. It's also not clear whether these things will materialize. There's no enforcement mechanism there. And it turns out that, these trade negotiations have not been as easy as they thought they would be. So they thought that they said they would have 90 trade deals in 90 days. There are barely 10 trade deals. It's more than a year now. So it's not easy, right? And countries have other options too. Like India has, in response, has been negotiating with the US, but also been negotiating a lot of FTAs, right? With other countries like the UK, the EU deal is basically finalized. It's just waiting legislative ratification and so on. So I think it's the right strategy. And also, what does a deal mean with Donald Trump? You have a deal, next day he can say, oh, this happened now, I'm putting, imposing another 50% tariff. So a deal doesn't really mean anything, right? So
Exactly.
the US is not a very reliable trading partner right now. And also, Trump makes these deals and then says something new happened for which I need to put a new tariff now. So, yeah.
Exactly. So, I
Yeah.
mean, funnily enough, I wrote three articles for the Indian Express back to back in a period of maybe a 1 month apart, right? And in the
Right.
first article, I said India needs to get a trade deal done with the US. In the second one, I'm
Yeah.
already slightly more cautious. And by the third one, I'm actually saying we don't have to rush towards a trade deal at all, because even if we do get a trade deal, as we saw with other countries, Trump can just turn
Right.
around and put a tariff on you for some other reason. As we saw even with India, there was the
Right.
fact that you're just buying oil from Russia.
Mhm.
You could get a trade deal because you're buying something else from China. There was no way to predict any of these things. So, which means
Right.
making concessions to the United States at that point of time made no sense whatsoever. And I'm sure many other countries would have thought about it in the same terms as well.
Yeah. Yeah. Yeah.
But
Certainly.
yeah, I want to move on now. I mean, I don't want to get sucked into just a US
Yeah.
centric
Yeah.
talk about trade, but
Sure. Absolutely. Yeah.
because my headline kind of bit here is that Trump is surely the loudest voice and the loudest example in the breakdown of the rules based trading order, but he's surely not the only one. There's been a steady dip in the at least the rate of globalization, if not it's not globalization itself, but the rate of globalization has gone down. So if you just take the growth of trade as a percentage of global GDP, I think that has been declining in the last few years. I think Peterson Institute had this lovely chart on just this, on this globalization effect, right? Um,
Mhm.
my so should we look at 2016 or 2018, the first round of Trump's tariffs, as a blip driven by one administration, or I think a structural turn in how the world thinks? I have a hypothesis which I'll just put forward, and you can please feel free to completely negate it or trash it. I think 2008 was clearly the turning point in history, right? The 2008 financial crisis, because it was so widespread and there was stagnation all around, that led to a series of events. So whether it is the Eurozone crisis, which again led to a contraction in the economy, and we know that when there is a contraction or systematic contraction of the economy, countries generally tend to start looking inwards. The political winds shift as well, where there is increasing talk about the outsiders, us versus them, xenophobia, keeping immigrants out, the trade, rise of populism. I think all of these are linked to each other. I would feel that the politics always, in a way, follows the economic downturns. Then you had, the Brexit, and then the rise of Trump, right wing nationalism across the world. So I think all of these things are connected. And the starting point is 2008, because from roughly the dot-com bubble 2000 until 2008, especially after 2003, when Greenspan kept global rates at 1%, we saw in fact the greatest rise in trade and global growth. And 2008 seems to be that kind of a cutoff point. Would you agree with that? Would you see that as a defensible hypothesis?
Yeah, I think, we've always seen that, when times are bad, when the economy is doing badly, the protectionist pressures are high, right? The protectionist forces uh, uh, become very effective in those times, during those times. So uh, I totally agree with that. Add to that the China issue, right?
Yeah.
That there's this country, China, that is not playing by the WTO rules, and they have managed to kill jobs because they've acquired this um competitiveness by flouting WTO rules. We allowed them in, and now they are taking away our jobs. I agree with your, the state of the economy link with protectionism. Plus, this just adds to that, right? And and it's not just in the US, even in Europe they felt it, right? The UK, they feel that they lost jobs. And even in India, they feel that China has this extra competitive edge when it comes to manufacturing, and that's why India didn't sign the RCEP, and so on. So it's there everywhere. But your hypothesis is absolutely right, and that happened during the Great Depression as well. The Smoot-Hawley tariffs started
Yeah.
a little earlier, but they thought that by adding to those Smoot-Hawley tariffs, expanding beyond agriculture and so on, they could actually, you know, offset all the other, recessionary forces that were in the economy. So you're absolutely right about it. And, and so there's been, a rise in protectionism all over the world. Not as much as in the US. I mean, some of the protectionism is actually a reaction to what the US has done, but there's even taking that out, the countries have become more protectionist.
Yeah. And the idea is that protectionism doesn't always look like tariffs, right? There is subsidies, export controls, local content rules, even just screening foreign investment, and so on. So it has many different forms. Of course, for the longest time, when even during the WTO rules, you might have had, tariffs might have been a taboo thing, but there were a lot of non-tariff barriers as well. So that has always kind of existed. But I think the what I'm interested in, and where I definitely want to hear your opinion, is on the rise of industrial policy across the world. Industrial policy almost went from being a dirty word almost in global kind of economic parlance to orthodoxy, and that change flip happened quite quickly, maybe 5 6 years. I mean, in the global economic scale, that is quite quick, right? So you had the Inflation Reduction Act, the Chips Act in the US, EU had its own version, China had its own version, India had the PLI. Without getting into any of these particular kind of acts, the idea of industrial policy seemed to take hold very quickly. Maybe it was war related. You had, the Russia-Ukraine war, COVID, bunch of these things as well happening at the same time. But that flip has happened, right? So is the economics behind this flip in any way defensible? The fact that we need industrial policy, at least, what is the best case scenario for industrial policy? So, for instance, would an industrial policy for semiconductors actually make sense?
Let me start with a small anecdote here. When one of my chapters in my dissertation was on the political economy of tariffs, import tariffs versus production subsidies. And Professor Bhagwati, who was Professor Jagadish Bhagwati, who was one of my advisors and one of my dissertation advisors, and also was part of my dissertation committee, he suggested that, and when I was trying to get that chapter published, he said that, instead of calling it tariffs versus production subsidies, call it protection versus promotion. One
All
is
right.
protection, the other is promotion, right? So, you can look at it in a different way, right? Instead of protecting, you're promoting. So that was an interesting thing, and that has always stuck with me. But you're right. A lot of what you saw with the CHIPS Act and the Inflation Reduction Act, they basically was subsidies and tax breaks, right? With the Inflation Reduction Act, there was a lot of creation of it was mainly green industrial policy, promoting electric vehicles, promoting the manufacture of solar panels, also promoting cleaner ways of manufacturing existing things and so on. With the CHIPS Act, it was mainly semiconductors, in particular, advanced microchips, in which the US was highly dependent on Asian countries, especially Taiwan, and it was a national security risk, and it was a national security rationale. Now, some people say that these are real rationales. Some people think that this is disguised protectionism, right? And so on. So, so this certainly went on in the Biden administration. There was a lot of that kind of protection, or if you want to call it promotion. And now Europe is doing the same thing. They started all this, what Biden did with a lag. I mean, the Trump administration has more or less kept this CHIPS Act intact, but it's downsized the Inflation Reduction Act quite a bit because all the green stuff they don't like. so,
Yeah.
so obviously this. So that's. But there's still some of it. Um,
Yeah.
and of course, they like the national security part of the CHIPS Act, right? Europe is doing the same thing, and in India also, tariffs have been going up a little bit, but industrial policy has been rising so much so that the World Bank in a recent paper in a recent report actually has defended industrial policy and as if, and said it's a good thing. They said that they made a mistake when they actually, when they produced their report, The East Asia Miracle, in the 1990s.
Yeah.
They were trying to analyze what happened in East Asia. And East Asian countries actually, countries like Taiwan, Korea, and so on, they certainly had used industrial policy. Now, one of the things that often doesn't get emphasized, and some people do emphasize it, is the political economy and the capture aspect, right? That you need a certain kind of government to be able to do it, that those policies are not getting captured by special interests, right? That those policies are being given to sectors or even firms that are deserving, rather than the firms that are lobbying for it, right?
Right.
And if these kinds of policies get captured, then it defeats the whole purpose of industrial policy. And in Korea and Taiwan, you know, governments were good in that respect. Will that happen everywhere? We don't know. And in the current World Bank report, they've also ignored that part, the part about policy captured by special interests. So if it's possible, theoretically, it's very possible. Krugman wrote a paper, I think, about Japan a long time ago. It's called Import Protection as Export Promotion. You
Yeah.
actually have this protect firms, emerging firms from imports, because they're still kind of in their development phase. And then, they grow so much, they become, as a result of of that protection, they become so efficient now they can actually export stuff. So it was basically, you did import protection, but the end result was export promotion. So theoretically, it's very possible. And there will be some governments that will be able to pull that off. In some other countries, policies will get captured. So I don't think there's going to be kind of a uniform outcome everywhere. Even in the World Bank report, they talk about different conditions under which industrial policy will work, and different types of industrial policies that will work in different countries, depending on country size, country's level of development, state capacity, how there is all this expertise to handle sophisticated policy instruments for industrial policy, and so on and so forth. They do have certain conditions, and they do categorize countries into different types and policies into different types, and look at a match between policies and countries.
Sure.
But
Yeah.
certainly you're right, industrial policy is back. Yeah.
Yeah. So on just that count, I mean, I'll come back to the political economy part later. I definitely want to hear you on that. But just sticking to industrial policy, is there almost a game theoretical model going on here, which is, if the rest of the world is doing industrial policy, I have no option to do industrial policy, right? So the Nash equilibrium turns out to be almost like this low level equilibrium where every country is doing industrial policy because other countries are doing it.
Yeah. So we know what happens with trade policy. If trade wars, no, most countries don't win a trade war, and meaning almost all countries are going to lose a trade war, because what happens with a trade war is that, I think, let's say I can put tariffs and switch expenditure from foreign products to domestic products. Now, that means I'm increasing domestic production, but other countries are doing the same thing in retaliation, and they are trying to do the same switching. But remember, my tariff actually switched expenditure towards my country, but their tariffs are switching expenditure away from our country into their country. And in the end, if you aggregate this up, we might actually be losing, right? Because I gained demand by the direct effect was through my tariffs, I gained demand, but then that triggered a tariff response that actually took away demand from my country. So overall demand, in the end, might actually, when there's a lot of this going on, might actually go down. And that's maybe, this didn't trigger the Great Depression, but it certainly made the Great Depression worse, so much so that countries were desperate to restart trade again, and which happened. This whole expansion of trade happened over the next half century, right?
Yeah.
So, and the same thing happens with subsidies, right? In the end, if we all enter this kind of a subsidy war, I might strengthen my industry, that takes away resources, but the other country is doing the same in response. They're using up resources. But in net terms, if we look at aggregate up the forces, the net forces, nothing may have changed, right? In
Yeah.
it is a Nash equilibrium, but we all know the prisoner's dilemma, right? And the Nash equilibrium might not lead to a higher welfare outcome overall, right?
Yeah. One final question here.
Yeah.
Is Econ 101, the way we understand it, irrelevant in today's geopolitical climate? Can we genuinely argue for freer trade, especially when the predominant notions of resilience and there is a whole bunch of new vocabulary that has come up: friend shoring, near shoring, de-risking, supply chain resilience, all of these bits, and countries are taking that. Even if we strip away that some part of it is meant for protection, there is a security angle, I suppose. There is a geopolitical angle. So is economics without geopolitics irrelevant? Does that necessarily have to be tied together?
Okay. Yeah. So this is an important and not an easy question to answer. Okay. So I have to give this some thought. And let me say that Economics 101, I'll actually say that Economics 101 is still relevant in the sense that, you know, what we teach in Economics 101 is under a certain set of assumptions this can happen, right? So when we don't have in these models, we don't have any kind of geopolitics, and then what is going to be the final outcome, and you teach the logic behind that. Now, adding another, so you obviously Economics 101 is about starting with the simplest model, and then you add more wrinkles, more complexities to it. So if you know how to solve that model, you would need to be able to solve that model before you add geopolitics into this model. So that would be the extended model. And someone who's understood what happens with the standard, model in Economics 101 will know better how to incorporate geopolitics into the model. So in that respect, I think that it's a necessary condition to understand the standard Economics 101 model before you actually incorporate geopolitics into it, right? And a good student of Economics 101 will understand that when you bring in certain other, like you move from perfect competition to imperfect competition, different forms,
Monopoly.
monopoly, oligopoly, monopolistic competition, and so on. But you have to start with something like perfect competition, right? Same way you start with this kind of a model, and then you add geopolitics into it, and that's making the model more realistic. And as long as that geopolitics is there, you know, you can see that there are these departures from the standard model. And I agree that but you really have to start with the standard model, I think, before you bring in geopolitics, and then only then can you appreciate the what geopolitics added to the model, how it changed the outcome of the model. But you cannot just start with geopolitics, right?
Yeah. Yeah. Okay. Perfect. Thank you. Thank you for that. I mean, I feel much better as an economist myself. I'm glad that you said Econ 101 still matters. I want to move now into, I think, something that you've spent a considerable bit of time. You've written, books on this, on the idea that if we know as economists that protectionism is bad, why does it still survive? Right? Let's go back even before the Trump era. Let's again try to understand this in well, presumably a normal world. One of your ideas is just on who organizes, right? It's about lobbying and who actually organizes, right? So the consumers might pay for protection, but they don't necessarily organize. Whereas a few, let's say, import competing producers are able to organize. So you spent some time on this. You've written about this. There's quite some material on this. Can you explain that to our listeners?
Yeah. So, even in, a standard setting where trade increases welfare, trade, by that we mean trade actually expands the overall pie. It's quite possible that not everyone's slice expands. You could have a bigger pie, and yet you could have smaller slices for some people.
Right.
They're called losers from this policy. And then you have people who have new slices that are much bigger, and they are called the winners from the policy. So you have policy, even moving towards free trade, which increases the overall size of the pie, creates winners and losers. Similarly, protection is just the flip side of that. If you move from free, to less free trade, let's say, to more protectionism, to higher protection, it will create winners and losers. Now, and so that's why, if the winners are politically stronger, better connected, politically better organized, and so on, you're going to see the winners from protection actually win, even in the political arena, and you're going to see protection, right? And we have protection because the winners from protection are better organized than the losers from protection. Very easy, right?
Yeah.
Now, we could think in terms of, um, you know, consumers versus producers. We could think of import using producers versus import competing producers,
Right.
right?
Yeah.
And so on. And so the producers versus consumers is the easiest to see, because let's say, in the classic case in the US is sugar, right? There's very high protection, combination of tariffs and quotas on sugar here. But, you know, and here we just leave, don't take into account the bad effects of sugar on our diet and our health and so on. Let's say, consumers end up spending some money on sugar, like 10, maybe less than $10 a year, right?
Yeah.
Uh, or a little higher, let's say. But if you look at the overall losses from having such high protection on sugar, if you aggregate up the losses to consumers, it's very high. This is coming, and this is due to protection. If you look at the gains to producers, like sugarcane producers, sugar manufacturers who convert that sugarcane into sugar and so on, their aggregate increases in profits and less than half of this, but they're very concentrated, like 14 or 15 manufacturers, and these are like, we are talking in terms of tens of millions of dollars for each, while the loss for each consumer might be $6 or $7 per year. So consumers are 350 million consumers, and this loss is very dispersed, right? And nobody's going to spend a lot of time recovering the $6 or $7, while each of these producers, even though the aggregate gains are smaller, they're highly concentrated, and they care about the tens of $1 million that they could make through protection. So they are going to get very organized. They're going to be politically active. They're going to make political contributions. And then these, among consumers, there's going to be a free rider problem. It's not worth their time. The opportunity cost of their time is too high to get organized and, fight against this protection. So that's how, you have these uh, constant, smaller aggregate, but much more concentrated benefits going to the beneficiaries of protection as opposed to the people who get harmed by protection. So
Yeah.
that's one thing. There's also exports versus import competing interests, right? And often export interests are not as well organized because the gains to them from tariff reductions are very indirect, so they're not going to get organized. Also, tariffs cost money, while export subsidies, tariffs generate revenues, while export subsidies actually use up revenue. So tariffs generate revenues, export subsidies use up revenue. So governments are, less likely to be responsive to export interests as a result. So to give them any direct benefits, and also under many rules, export subsidies are not allowed. So that's not going to happen. So then you also have that import competing versus export interests, where import, because the government is going to be more receptive to import interests. One, because they generate revenues, and also they think that the governments could say that, okay, they're trying to create jobs, and they can give all kinds of reasons. Import competing interests are going to be more easily organized,
Yeah.
except when you have, you know, trade agreements with reciprocity built into them. There was the Reciprocal Trade Agreements Act that was enacted right after all these, high Smoot Hawley tariffs, where, through log rolling basically meant that other sectors were also getting these high tariffs during the Great Depression. Later on, in order to promote trade, they had the Reciprocal Trade Agreements Act, and the one of the main objectives was to empower export interests, because if you have the idea was that we're going to make these reciprocal trade agreements where we are going to say that we'll reduce our tariffs if you reduce yours. So then the exporters became very active politically in the US, because they thought that tariff reductions in the US could get them markets elsewhere, because they would basically, trading partners would reduce their tariffs. So that actually empowered export interests. So if there is this reciprocity element, then you also kind of empower export interests, and they get organized and so on. The other thing is, of course, I have a paper with Praveen Krishna, two papers on reciprocated unilateralism, right?
I was going to
And
refer that, yes.
yeah, and where, if you reduce your tariffs, that's basically going to empower export interests in your partner country, right? And that is going to create a reduction in import tariffs in your partner country. So there are all these other, wrinkles that you can add, and that happen in the real world. There are many applications of the reciprocated unilateralism. We can talk if there is time. Talk about that if there's.
Yeah. Jagdish Bhagwati had also written about this, right? And
Yeah,
it is one of the enduring but counterintuitive ideas in economics, and especially international economics, which
yeah,
is and you formally shown that one country liberalizing unilaterally can actually
yeah.
shift terms of trade and pull its partners towards freer trade as well, right? So you
Right,
get
right,
this
right.
kind of reciprocity without even the need for negotiation at a trade table.
Exactly, exactly. Yeah, yeah.
And I think that is beautiful insight.
We've shown that in another paper where it could even happen in a model of majority voting. So
All right, yeah.
yeah, yeah,
So, in the next bit, and again, I'm going to rely on the work that you've already done, which is on the developing country kind of asymmetry. We need not go too deep into this, just a superficial answer will do. But you found that the revenue motive for tariffs sometimes matters more than lobbying. So, when is the tariff really just a tax collection tool, and when would you think of it as for all the protectionism basis, especially for developing countries? Some of it looks as a is it seen as seriously as a revenue collecting tool?
No, no longer. The revenue aspect, is important in which paper were you talking about? Where was it like a formal theoretical model? I don't think I have any one where I put a higher weight on.
No, no, not
Uh,
higher weight, but it's just that some developing countries actually try to
yeah,
think.
I may have made that point. In some
Yeah.
developing countries, in developing countries, their direct tax collection mechanism is very weak. There's a lot more tax evasion when it comes to direct taxes than indirect taxes. So they have to rely on indirect taxes, and many of those countries earlier relied on tariffs. And the US also did so in the 19th century, 18th and 19th century. And Trump tries to kind of talk about those days as being like the golden age of America and all that. And yeah, the US was a much more backward country compared to where it is now. So, and so they relied on tariffs for revenues. But now, if you look at what revenues tariffs can raise, it's going to be a very small fraction of the overall revenues that can be raised through direct income taxes, nowhere close. The only thing it can equal is the tax, the losses from the tax cuts the Republicans are planning to give to, the high income people. There will be some loss of revenue that could be made up by tariffs. But, compared to the overall tax revenue that is raised by direct income taxes, this is minuscule. So, but it could still be an important source of income in low income countries, right? Where the
Government is
and
very keen to get.
firstly their total revenues are very small, and they can hardly raise any revenue through their income taxes because the tax machinery is weak and there's a massive amount of tax evasion, and so the only whatever little revenue they can use will come from indirect taxes, of which import tariffs will be a big part.
Yeah. All right. Thanks. I want to move to the next section, and we can almost treat this as a rapid fire round. I want to spend the last bit on India. So before I get to India, I just want to get
Yeah.
your thoughts on the future of trade. So yes, we might be entering into slightly speculative territory here, but with that caveat, let's get into this. Where do you see trade going forward from here? Is it Are we going to have mega regional blocks? Are we going to have just bilateral FTAs amongst friends, more of this friend shoring business? Or are we actually truly going to fragment away? At least the initial bits that I'm seeing is that there's increased bilateral trade happening, some regional blocks developing. So where do you see this going forward? Let's say, a few years down the line.
So, firstly, let me stress that it's very difficult to predict
Yes.
because so many other changes are happening in this world. One of them being, probably the main one being AI. And AI makes comparative advantage predictions very difficult. What kind of automation and robotization are we going to have, and which sectors, and how is that structure of comparative advantage going to change as a result? Labor intensive sectors might get automated. If that happens, who has comparative advantage? We don't know all of that.
Yeah.
But from what we are seeing now, I think it could be a combination of FTAs, each of which could be bilateral or trilateral or a bit larger. Uh, and also, intra geopolitical block trade is likely to grow given national security concerns growing on all sides, right? It is also possible that a lot of countries might try to get away from the US, as they might view US as an unreliable partner. As I mentioned earlier, a trade agreement with the US doesn't mean much, right? Now, the WTO says still most of world trade is under about 70% or more is under MFN tariffs still happening. Um, Now, maybe, countries other than the US probably want the WTO to survive and be strengthened. Only a super powerful country like the US, and the current administrations, and it's pretty open about it. They say in different terms that might is right, right? They've said it in many different terms. So they're certainly not in favor of a rules-based trading system. And now there's new theoretical research. There's a paper by Aditya Mattu, Michele Ruta, and Bob Steger that looks into what changes need to be made in WTO rules because of geopolitics. There are there's one or even two hegemons, right? And how rules need to be changed. They talk about geopolitical exemptions, like we have FTA exemptions under the WTO, and how they've certainly shown theoretically that negotiations are possible that will make these geopolitical hegemons better off through negotiations, and that could be theoretically be achieved in a WTO setting. I don't want to get into the hairy details of that. There's also a new paper by Becko, Grossman, and Helpman that predict the formation of geopolitical blocks if you have like two hegemons and base and they also have a group of non-aligned countries that will just emerge in equilibrium. If you're in one geopolitical bloc, you get tariff reduction from your own geopolitical hegemon, but you still basically have to pay higher tariffs if you're exporting, or your exports are subject to higher tariffs in the other geopolitical hegemon, right? And so on. So they kind of are showing that these three groups of countries might emerge. So there's a lot of things going on, but I would say it's going to be a combination of FTAs, primarily bilateral,
Hmm.
but alongside that, you would have all these geopolitical blocks, and the current theory is predicting that. But on the other hand, if it also depends on people are seeing high prices. They want their improvement in their pocketbooks. They want prices to go down, and as we said earlier, trade goes in cycles. So who knows, there might be a popular movement where people want more trade, and it's happened before, right? So
Yeah.
so it's very hard to predict, but at least in the near to intermediate run, I see FTAs more on a bilateral basis, along with trade dominating interblock trade. By block, I mean geopolitical block. And here, yeah, so that's my current prediction. But long run, I just cannot predict. I can predict like in the short to more intermediate run, but that's about it.
Yeah, definitely. I think yeah, speculating beyond that is an exercise in kind of yeah wouldn't be a very useful or a clever exercise to indulge
Yeah.
in. I want to move on. The WTO's kind of the dispute system has been hollowed out, for quite few years now. So I want to think about just this bit, just carrying on from where you left off, which is that kind of WTO based, rules based order rebuildable? Is it salvageable? Or should we just look past it? Because WTO, in any way, the US had quite a bit of say in that, and the US is clearly not interested. They're flouting rules. China was part of the WTO, they were flouting rules. And so, is it possible to build a rules based order without US and China? I think there's enough. I mean, the global economy, even without US and China, and allied partners can be big enough. Let's say the EU, India, Australia, Japan, Southeast Asia, etc. Can there be a rules-based order minus US and China?
I think there is, people are talking about that a lot, right? Uh, at this point, countries don't push back against US and China because the world is highly dependent on them, right? In many ways. So they are dependent on them because National security and national defense depends on them. China is still the world's biggest manufacturer of goods, and so on. So at this point, people think that it's probably not very practical, but there is this movement, and that's why said that there's the paper by Mattu, Ruta, and Steger. They talk about having overall a rules-based order, but allow for geopolitical exemptions.
Right.
I don't know how it's going to be put into practice. I mean, what happens with, when two geopolitical hegemons actually negotiate trade, that's going to have spillover effects on other countries that could hurt other countries, hurt their terms of trade and so on. They say that it is possible to actually protect them from these terms of trade spillovers and do the negotiations. It's going to be a complicated mechanism. And then they say that, it might be better than the alternative. And look at what happened after the Second World War. It took 5 or 6 decades to fix the system. So, we should try to do this as well. It is possible that we just totally exclude the US and China. It's going to be difficult. Whatever we might think, the rest of the world is dependent on them a lot. But, there's also this idea of having a rules-based order with geopolitical exemptions. So these are the alternatives that are there right now.
Right. Thanks for that. We'll now. I think let's. It's time to bring it all home. And let's talk about what does all of this mean for India. Now, I never thought I would say this in my life, but I sort of agree with Trump when he says India is tariff king. And I think you have made similar arguments. I think the popular narrative in India is at least that India is a victim of Trump's tariffs. But you've argued, and as have I in various places, that the important problem is actually at home. We have been quite protectionist in compared to all of our trading partners. The average tariff rate differential even between India and the US is higher than many other countries with the US. So was it really a surprise that we got 26% plus and India was the recipient of the highest order of tariffs from the US?
Yeah, I mean, the whole set of tariffs was certainly, Liberation Day tariffs was certainly a surprise. Among those, India actually got away with, considering what other countries got, even Australia got a tariff of 10%, and, Korea got the same as India, roughly, right? So that was pretty surprising. I mean, if Korea got 25% or 26%, India should have gotten a lot more, you know. So India got away with not a lot, but India later on, was penalized quite a bit, because when you have this 26% tariff that comes out of whatever formula they have, they're saying they're following a rule and they come out with 26%. And then just on the basis of some, without any calculation being done, just say, we're doubling it because of you guys are buying Russian oil. That was the big surprise. And Trump caring so much about Russia benefiting and all that when he actually was Putin's best friend, that came certainly as a surprise. But overall, I agree that India's tariffs have been pretty high, but more than the tariff, I would say that India has had very high tariff inversion, right? And it has tariffed imports of its input more than import competing output. And that's basically kind of not good policy.
Yeah, I think India's highest category of goods that it imports from China is actually, as against what most people think. If you asked random people on the street, I think everybody would say we import finished goods and mobile phones from China. But
because that's what they see.
Yeah, but our biggest category of imports is in fact intermediate goods.
Yeah.
should help our exporters and other producers as well, not just exporters, but producers as well. And I think in your 2018 FTPs with Lovely, you had mentioned, I mean, you kind of warned even then that India's rising tariffs would hurt the Indian economy. And the average tariffs of India has in fact gone up ever since, right? So, from purely an Indian case, who does this protectionism actually protect? Is it again, if it's not the revenue argument, which I don't think, or I hope it's not, is it purely lobbying effort? So how does that play out in India? So we spoke about it from a theoretical model, but in India, is it again just lobbying why we do this protectionism? Is it political economy playing out? Is it just vote bank politics? Like, how would you kind of explain it in some brief terms?
So in India's case, there are these, big manufacturing firms, right? They certainly want protection, right? So there are special interests that want protection from Chinese competition. And there could also be some amount of um, lobbying coming from unionized workers and big firms, big manufacturers, right? Because unionized workers are tied to those firms and they benefit when the firms benefit often. Um, so it's not, of course, the consumers, but there is also a nationalism element in that has entered tariffs now, right? So that was not there in the standard political economy models earlier, but there is certainly a nationalism element, and Trump has capitalized on it. And the government in India also feels like, if we just, unless we kind of put tariffs on China, or, we are going to be viewed as weak, right? So that, tariff is being viewed as a weapon now, right? And, and if you're not making use of that weapon that you have, you are kind of being perceived as weak. And I think that is basically a part of economic nationalism. So economic nationalism also plays into it, I think.
Yeah. Now we've had high tariffs for quite some time, as even before the tariff war, and we've done lots of silly things to, in some cases, shot ourselves in the foot with putting specialized rules on Amazon and Flipkart, which is owned by Walmart, as against a Reliance. Trying to do, for example, e-commerce regulation through the FDI model instead of something else. So we've done a whole bunch of things which, of course, angered the United States back then, and we were removed from the generalized system of preferences. So this predates this particular Trump era tariffs, right?
But
Um,
we were removed from GSP also because we became richer, right?
yeah, yeah, yeah,
Yeah.
yeah. But I want to move from there. What can we do now in terms of how do we become competitive? So if tariffs are not the answer, from let's assume that let's leave the strategy part aside for just a moment. If tariffs are not the answer, how do we become export competitive in the world? Is it? I mean, we know one part of it is by increasing as imports, right? Or making it easy to import just so that you can export. I think that is, again, what economists would tell you, that you need inputs in order to produce outputs, which is why PLIs don't work that well, because we're putting high, tariffs on imports, which is used for, in fact, exports. But apart from that, the standard economics answer would tell you, we need to do structural reforms. We need to do labor market reforms. And, we need to make ease of doing business easier. So, how would you kind of encapsulate all of this?
Yeah, domestic reforms are certainly important, right? And I think the recent labor reforms have been a step in the right direction. Um, and so that's one thing. And the other thing I talked about earlier was tariff inversion.
Yeah.
We should make sure that we don't have tariff inversion. There's, you have PLI and PMP, but the logic with PNP, not so much with PLI, but even though both are related, is that you want indigenous supply chains and you want to impose tariffs in a phased manner so that the whole supply chain is located within the country, right? As
Mhm.
opposed to have be part of a global supply chain and do the tasks that you do best, that are the cheapest done within India, right? This is the whole idea of global value chains is based on production fragmentation. You break up the production process into many parts so that you can locate each part of the production process in the country where it's done cheapest, right? And that way you actually minimize the cost of production. You kind of can offer goods at very low prices to consumers. Now, if we keep these production chains totally indigenous, you can't compete with products being produced through global value chains, right? Global supply chains. Why? Because those are, based on optimization. Each part is being produced where it's cheapest to produce. Each part of the production process is being done where it's the cheapest to do. In this case, you're not doing that. So you might, forget exporting it, even to actually sell to your own consumers using an indigenous supply chain, you might have to have permanent tariffs, because the moment you open up, the goods that are produced through a global value chain will just outcompete these indigenous supply chain goods. And in fact, even as far as jobs go, Veeramani and his co-authors have shown that you know firms that you can create much more value. Like empirically, they've shown that the total value added is much higher if you focus on certain specialized tasks within a global value chain than if the whole chain is inside. Why? Because there's one, with indigenous supply chains, there are these high value added tasks and low value added tasks. You also get hold of the high value tasks. But by specializing in low value added tasks within a global supply chain, the value added per task effect, which goes against it, actually is more than offset by the fact that the volume is higher, right? So there are all these things, and I would certainly say that tariff inversion goes against it, and they've also shown that it's the network products, that there's certain kinds of products where production fragmentation is much more common in those kinds of products, like electronics and electrical machinery and automobiles and so on. That's where tariff inversion is the maximum in India. That's where the tariff inversion should be minimum,
Right.
right? So those things hurt in terms of exports, right? We certainly had problems with respect to labor laws, land acquisition, and so on. Labor laws, as I said, moving in the right direction. We have all these, especially that, earlier it was a 100 worker rule, which basically prevented the firing of workers if you were a firm bigger that employed more than 100 workers. It has gotten raised to 300 workers, and now the states can actually increase that threshold through a notification. That's really good, and that can go a long way in solving this problem of uncompetitive exports. But the land acquisition problem also needs to be solved. The government has done a good job with respect to some of the other problems related to domestic policies, but much more needs to be done.
All right. Thank you. Final question. And
Yeah.
this is just kind of bringing it all together. So we understand clearly India needs to do structural reforms. I think that is, many people have spoken about that. Tariff inversion, I think that's a great point. We need to fix that. But on, let's say, not just the tariff inversion bit, but we do still put tariffs on other goods as well, on even not just on inputs, but even final goods. How far do you think our Econ 101 would apply here? How much would you push the government to unilaterally reduce tariffs in 2026? Is that naive for us to ask at this moment in time when the entire world is being protectionist, putting tariffs and doing things like industrial policy? Would it make sense for India to unilaterally reduce tariffs? Would you push for that?
At the very least, unilaterally reduce tariffs to pre 2014 levels, right? Because, uh, it was a quarter century of work to kind of, or I wouldn't say a quarter century of work. I mean, from 1991 to about 2003, tariffs kept going down. And then the next 11 years or so, tariffs were maintained at those low levels, right? So for 25 years, we had these reformed tariffs, lower tariffs compared to what it was pre 1991. But then a big proportion of, not a big proportion, but I would say a significant proportion kind of was reversed. We went back to higher tariffs. And especially given that the India's performance and growth in those 23 years was not all that bad, right? So, which means that, India could certainly in these last 12 years or so, India could have done much better probably if we had maintained those low tariffs. But the government had other ideas, Make in India was kind of viewed, it was interpreted by policymakers as mercantilism, promote exports while you do import protection. You cannot have both import substitution and export promotion at the same time. It kind of violates learner symmetry. I can talk about it for hours, but I won't. But it's just not, economically or even mathematically possible given limited resources and all the exchange rate dynamics that it would trigger if you try to do it. So basically, that an import tax is also an export tax. So if you want to push exports, you cannot do that if you're raising tariffs, right? Because by raising tariffs, you're also taxing your exports. I can, if you want, very briefly, I can explain it, but I think, it happens through a few channels, but I don't think there's any need for that at this point, unless you think that I should go into it in some small detail.
No, I think that's come across. We can close here, but one final bit is that what if you had to recommend one book or a paper even for our listeners to kind of understand and grasp this really well, which one would it be? I'm going to do the easy one, and I'm going to say probably your own book on the political economy of trade policy. I think is a fantastic read to understand more than just the economics of trade, but the political economy of it. But what would you recommend, Devashish?
Yeah, the political economy of trade policy book that I have is a collection of my papers on the politically already published journal articles.
Yeah.
So it's with an introductory chapter added to it. So it's nothing on top of what I had done before.
Yeah.
But it does, bring everything to one place. Yeah, that's a hard question. What book should we be reading right now? I'm going to start reading a book by Chad Bown and Somaya Keynes on how to win a trade war, an optimistic guide to an anxious global economy. And it's about, and they make the point that geopolitics is here to stay, but, how do we win trade wars? I actually am not convinced, from whatever I've heard of their argument, but I want to basically go through this in greater detail before I kind of critique it, and because I don't think that we'll always have to, this trade war between US and China is a permanent thing. uh, I also am not totally convinced that geopolitics is a permanent thing. It'll come and go, I think. So that's one book that I certainly would read. And anyone who actually wants to understand economics and what economics has given us, there is a book called The Shortest History of Economics. I don't know whether you've seen it. If I can,
Andrew
um,
Lay?
Andrew Lay. It's even I read it really quickly. Even I was able to learn a lot. So I think most people should read it. And the other thing that I've come out with is this book is an encyclopedia that I have on international trade.
Wow.
I have co-edited with Priyaranjan Jha.
Mhm.
It's just come out from Elgar. It is a collection of entries, more like chapters, 48 of those, by very eminent trade economists. And it has some really good pieces on old stuff as well as new stuff. And, if people get a chance, they can take a look. I mean, the hard copy version is expensive, but the version is not that expensive. I mean, still might be expensive, but it's cheaper relative to the hard copy. But I would say, if people want to understand geopolitics, I would tell them to read the book by Chad Bown and Somaya Keynes. I would also and see if they agree or disagree. I'm not sure I agree. There's and the book by Andrew Lay that you probably have read at some point, right? Or
Yeah.
have seen it. Yeah, it's an excellent book. I
Yeah.
mean, I thought it would be very elementary. I was in a bookstore. I was visiting the University of Nottingham earlier this year. So I was, spending some time at a bookstore nearby, and I picked this book up, and then I read it a little bit and actually bought it. So that's another good book. And if people want to know more about certain topics and so on, as I mentioned, you should look up our Elgar Encyclopedia of International Trade.
Sure.
Yeah.
Brilliant. Thank you so much. Thank you for your time, Professor Mitra. This was a fascinating conversation. Thank you.
Thanks so much, Anupam.
We hope you enjoyed that conversation. If you're interested in public policy, AI, geopolitics, or defense, do check out the courses offered by the Takshila Institution. And for more conversations like this one, stay tuned for the next episode of Turbulence, Global Finance and Geoeconomics in an Age of Disruption, a special series of the All Things Policy podcast supported by Zerodha.